Executive Magazine, independent thinking for the discerning mind.
I have the honor of sitting here today in London with MAKRAM Azar, who is now at Barclays, Chairman of Banking EMEA and Chairman of Barclays Bank PLC MENA. MAKRAM, you've joined in September 2010 Barclays from KKR, and prior to that you've spent 18 years at Lehman Brothers. So tell us, all these years, what wakes you up in the morning and makes you go to work?
Really the passion and the drive of making things happen. Every day you wake up, you need to have the spring in your feet to look forward to the day and what you're going to achieve. And that's been a long-standing sort of passion of mine, to work in finance and making things happen and seeing the result the next day in the Financial Times or Wall Street Journal, or just helping the economies that we live in progress and grow.
Can you recall a time where you had to step up?
I think most of us working in finance or on Wall Street, we went through the biggest financial crisis of our generation, of our lifetime, in 2008. So that was really a defining moment in my career, at least. It was a very difficult time for all of us in the industry, and how we dealt with it, and you could argue that we are still dealing with it today, but how we've taken care of our people, led them to the other side of the storm, was an important moment in our career.
And who did you look up to all these years?
I think I've had many, let's say, role models in my career, but maybe the one that we all look up to, given the success he's achieved over probably the longest time span, is Warren Buffett. I know you've taken pictures with, and I got to meet as well. And he, by any measure, has been the most successful financier, let's say, in his lifetime. And what he's achieved in terms of focusing on long-term value and being patient and not being distracted by bubbles and all sorts of short-lived excitements, I think is a good compass to follow. He taught me a lot from just a simple conversation in many aspects, which I'm grateful for.
So to jump actually to the next part of this discussion, I actually had a discussion with him back then when I met him about social media valuations. He wasn't yet interested in social media, but looking at current valuations, the parent company of Snapchat at $25 billion, it's very difficult to predict a cash flow model with number of followers or numbers of subscribers. How do you value such a firm?
Yes, I mean, obviously the sort of approach that Warren Buffett uses is different for social media or technology companies. So that's why he tends to invest primarily in, let's say, cash flow generating, well-established brand names, companies that have been around for much longer and are at a mature stage in their development. So when it comes to technology or social media, we have to use different metrics. And we were involved, by the way, as Barclays as a joint book runner on the IPO of Snap. And it was a big success. But in general, not only talking about Snap, you have to look at different metrics, at different data points, and project the future sort of success and conversion from having followers or viewers, etc., or users, to generating cash flow eventually. That was the case also for Facebook, and look now, obviously it's a very highly cash flow generating company. I think the market believes that the same will apply to Snap, the same will apply to Uber. And I think the market is becoming more equipped and able to understand such business models, because we went, and I used to cover media in my career in investment banking, also in the 90s during the first internet, let's say, revolution, all the way up to 2001. And we've seen a lot of companies come and go and disappear, but the winners of that cycle have been extremely successful even after the bubble burst. And in fact, if you look today at the most highly valued companies, they are Google and Amazon, which obviously started in the mid-90s and now are way ahead of every other well-established company that existed in the Dow in those days, and the market caps, Apple as well, obviously. are the largest in in the world.
Yeah, of course.
And people with long memories have learned from those lessons, and now they are better able to analyze the more recent, let's say, technology wave in Snap and Uber and Twitter and other social media that have emerged more recently.
And you're mentioning that you've covered media and you've covered a lot of other sectors as well. I remember at Lehman. What was your favorite deal?
Yeah, we all have a defining moment, let's say, in our career. And in my case, it was my first media transaction. Until then, I was in M&A and touching many sectors. And the previous deal I had worked on was in the chemicals industry for a company in France called Rhône-Poulenc that some of you may remember. And then I stumbled on a media transaction. It was probably in the mid-90s, around 94, 95. At the beginning of the media revolution. It was the media company of Prime Minister Berlusconi in Italy called Fininvest and Mediaset, its TV subsidiary. And we managed in those days of raising a big amount of capital, $800 million, which was a big amount of money in those days, from three very well-known media operators and financial investors like Prince Walid bin Talal, Johann Rupert from the Richemont Group, and Leo Kirsch, which was a big media magnate in Germany that I'm sure you remember. So it was the club of four prominent businessmen, and I did this transaction between them, which was called Project Wave at the time, and was very successful and led to the IPO of Mediaset a year later. And that actually, media, as many people would tell you, is a bit of a virus. So once you get hit by it, you get really addicted to it. So it was my first media transaction, and I ended up doing a few tens of media transactions after that, and caught the bug, and ended up having a 15-year career in media investment banking, which I really appreciated a lot and learned a lot from, and defined my career really.
And given your experience actually in the media sector, and I'm not trying to influence this answer, but where do you think is the next bubble?
I think it's the broadly defined technology sector. You need to be very differentiated in how you approach and analyze each one of these ventures, so to speak, because some of them will be very successful, as the example of the 90s showed us, in Amazon, Google, Apple, etc. And many of them will not be successful. And so I think with experience, you learn how to do due diligence on companies. But I think there are certain aspects or segments, if you will, of the broadly defined technology and media TMT space that people are excited about now, that you have to analyze very, very carefully.
So what are the big changes that you've noticed since the crisis in the banking industry, whether client type or M&A type, or the speed of deals, or do you feel there's been a big change in the industry?
There have been many changes in the banking industry, and we don't have enough time to go through all of them, but I think we're in a much better place now from a compliance standpoint, from a regulatory standpoint. I think from a deal-making standpoint, not much has changed. I think obviously there was more excitement before the crisis for leverage. That has come down a little bit, although we're seeing some improvements in the levels over the last couple of years. But otherwise, in terms of M&A, I think the activity and the deal-making is back to the levels that it had reached before the 2008 crisis, and you can probably observe so many large transactions have been announced over the last few months on both sides of the Atlantic. So I think M&A is back, but now I guess with the uncertainty recently created in elections around the world, there's been a bit of a caution being exercised. So we'll see what happens next, but I think the background or the backdrop is relatively healthy at the moment.
Thank you. So let's jump now into politics, world politics, and specifically start with the US. Trump's political, or actually economical agenda now is seen to be a little bit uncertain given what happened with the healthcare bill. Do you think this will have major setback or a small setback with the tax reform and the rest of the agenda, given the division that we can see in the Republican Party itself?
Yeah, I don't think the same would apply. I have no crystal ball, but I don't think the same would apply to taxes, because I think he came on this program, and usually the Republican side is in favor of reducing taxes, and I think they'll be probably less resistant than on the healthcare reform, which touched obviously many more people around the country, and some people who are not in a good condition, etc. So I think on the tax side and on the deregulation, I expect I expect those to go through, but we'll see what happens. We're in the early days of the new administration, so there's a lot to get through still.
So as for Brexit now across the pond, now that Article 50 is triggered, what do you think will be the downside for UK assets, for even the pound? I mean, we're quite low already, but generally speaking for the UK.
Yeah, I mean, the pound has already been hit. It got hit obviously during the referendum, or just following the referendum. So I don't expect much more to come there. It reached a level of 121 or thereabouts, went a bit below 120 as well against the dollar on the cable. But now we're back to a better level. So I think it's a double-edged sword in the sense that it makes investments in the UK more attractive for foreign investors, because the currency is low, and it makes exports more attractive as well. So it works in both ways, and as we have seen following the referendum, I think the expectations were for a much more negative performance of the economy. In fact, it surprised on the upside everyone. So there's been a lot of resilience, I think, in the UK economy following the Brexit referendum and following the decline in the pound. I think the next couple of years, now that the Article 50 got triggered, will provide some uncertainty, which uncertainty is never very good for investments and people with a long-term view, because they need to have visibility. So it may be disruptive a little bit until we get more visibility on what sort of deal the UK will manage to negotiate.
But will they manage to negotiate a deal? I think that's a question that I've seen as well, because if you look at Germany, like Ms. Merkel had quite a boost this weekend on Sunday, 26th of March, and it does seem that she's in bigger position to come and say, you know what, you didn't want to be a member of the EU, then there won't be a deal. And will Theresa May be able to sell that, the fact of a no deal, to Westminster?
It's in the benefit of both regions, so to speak, both the UK and the rest of the European Union, to agree to a good deal, because Europe also benefits from the UK. And if you could look around this neighborhood, whether it's South Kensington or the broadly defined neighborhoods here in London, there's so many Europeans who are living here and who work in the city. And so I think the UK should be able to negotiate a reasonable deal that's beneficiary to both regions, as Prime Minister May has mentioned several times. But I think it will take time to have that visibility, and it will really depend also on the elections in France and Germany and other countries that are so important for the European Union and for the negotiations. So I think it's early to say, but at the same time, I think you may have seen also through the recent announcements, for example, from the Qatari delegation, which was here a few days ago, of investments in billions of pounds in the UK, irrespective of the deal with Brexit over the next few years. The same was announced by other countries from the Gulf over the last few weeks. And the UK has a long history, as you know, of being a good trading partner for many regions around the world, not only Europe. But I really strongly believe that given the importance of the City of London, not only as a financial center for the rest of Europe, but as the deepest pool of capital in Europe, or on this side of the pond, as you called it. I think it's in the benefit of both regions to reach a good deal. And I think the worst case scenario, as Prime Minister May has mentioned, is no deal. instead of a bad deal. So there's a sort of a downside protection, if you will, of the minds of the UK government here.
You just mentioned that politics will continue to be at the fore in Europe. You mentioned France election and Germany as well, but there's also turmoil in Italy. There's ongoing negotiation in Greece. So what do you think is the next shock for Europe? Do you think there will be a Frexit, as they call it, France leaving Europe?
Well, it's that would be a big one, but nothing is surprising anymore. I think the fact that they have 2 rounds in French elections, unlike the referendum in the UK or the elections in the US, make it harder for Madame Le Pen, I think, to be elected in the second round on May 7th. But we've been surprised before, both in Brexit and in the US elections. But that would be a big, obviously, impact on the European Union. More generally, and
it
on
would
the
be
Brexit,
a breakup,
and on the Brexit negotiations. I mean, it's hard to predict, but obviously at the core of the European Union, you have Germany and France. So if one of the two goes, it will really put a blow in the whole concept of the European Union.
But you could see Marine Le Pen probably in the second round, more likely.
Yes, yeah, well, I think that's where the polls are indicating today. You never know what happens in the next few weeks, but that's where it's heading now.
With Macron, maybe, right?
That is the current prediction, yeah.
So net, what is your outlook for 2017? Where do you think we will be in December 2017?
I think I've learned a long time ago not to make such predictions, because I was actually in Davos, where I go every year, and I was there in January 2008. And you had all the big CEOs of the Wall Street banks and the global banks around the world, and the private equity firms all present there. And we all saw what happened less than a year after that. And I went back in January 2009, and none of those CEOs still had a job. So it's really hard to predict what could happen in less than a year from now. And I think 2016 was another lesson, where we all learned that it was very, very hard to predict such black swans as Brexit or Trump in the White House. So, I think I'm cautiously optimistic. You saw the Dutch elections showed a new turn, let's say, in the populist movements in Europe. I think the next big milestone or test will be in France. And then we'll see what happens after that. But I think if the French elections go according to plan, I think there will be less to worry about. And I think things on the US side, at least from an economic standpoint, are going well. And so I'm cautiously optimistic for the rest of the year.
So on that basis, do you still think the euro will still be there in 10 years?
Well, if I can't predict 1 year, I think it's hard for me to predict 10, but it really hinges on the French elections. So we'll find out in a short few weeks.
So what would you change in terms of legislations in Europe, if you could?
I think really now the biggest, let's say, overwhelming parameter in the European equation is Brexit and what deal will be negotiated. Because it's not only an impact or potential impact on the UK, it will be potential impact on the rest of Europe and in every sector, in every field, certainly in the financial sector that I come from and I operate in. So, but also, as I said, I think the city of London, even before the creation of the European Union, was such a big provider of capital to Europe, both debt and equity, because it's such a deep pool of capital, that I think the flows and the absence of restrictions on flows of capital will be extremely important. And to a certain extent also the flow of people, because we all live in an open global economy now, and you saw some of the reactions even on the other side of the Atlantic of the recent travel bans that were only obviously implemented against a handful of countries, and yet the big technology companies had an outcry because it affected their recruiting abilities for the right brains and talent, etc. And I think The same would apply here in Europe. If no deal or a bad deal is negotiated with the UK, and also the financial center of London, would have an impact on the European Union and the economy in general in Europe.
And what piece of legislation would you change, if any, in the Middle East? Is there something you would do for the region?
I think the Middle East obviously has started more recently, to develop in terms of the capital markets, the merger and takeover laws, bankruptcy laws, etc. And it's different in every country. But I think we are at that next level, let's say, of evolution, where maybe more openness in foreign ownership of companies and investments would be helpful on the flows of capital, as well as, some restrictions were lifted in Saudi more recently.
Yeah.
So I think if more moves are taken in that direction, it would benefit the region, and it would allow more consolidation also within the region, because I think in a number of industries, in particular, for example, in the finance industry, in certain Gulf countries, you have a lot of fragmentation, and I think the region would benefit from some consolidation in the banking sector, in the telecom sector. You have, in a number of cases, some duplications, also in the airline industry, etc. So I think if you have more legislation and deregulation in that direction, I think the region would benefit, and the activity, of MENA would benefit as well.
You're originally from Lebanon. If you were to be president of Lebanon, what would be the first thing you would do?
Wow. Well, I left Lebanon a very long time ago, but I still take a vested interest in its politics and in its future direction. It's a tough, obviously, question, and I think it will take a lot of political headache to achieve. But I really think if we can overcome the religious fragmentation in Lebanon, I think it would be a main achievement. So any move in that direction, I think, would benefit the country and would benefit the region, because more religious tension can only lead to conflict and tensions and obstacles. So I would aim in that direction.
How attractive do you think it is right now to have deposits in Lebanon?
For a Lebanese person, well, it's very attractive, because I think they get a very attractive return on their deposits, as you know, even in dollar terms, much more so than what they can get outside the country. And we just did, actually, it's a timely thing you mentioned. Last week, in the context of Barclays, we raised $3 billion for the Republic of Lebanon, which was a record amount, actually, of capital raised in one transaction, or a series of transactions. There were 3 tranches for the country, and we saw demand of over $17.5 billion for the $3 billion that we ended up closing on, so almost 6 times oversubscribed. And actually, what was interesting to note is a lot of the demand obviously came from within Lebanon, but a record level of demand came from international investors, much more so than at any point in the past. So it also shows that Lebanon has become increasingly attractive as a destination for foreign investors for their investments in the region, which I think was a very good thing to see in the context of Lebanon, given also what's going on in the region, in the Levant around Lebanon. So I think it's really a positive indication of sort of the direction of travel that Lebanon is taking, particularly after the recent, let's say, elections of the president and the more peaceful, let's say, arrangement that the parties have reached within Lebanon. And the economy is on a better track now as well. And so I think, to answer your question, deposits for Lebanese investors in Lebanon are attractive, but also for foreign investors these days as well.
And actually, are Eurobonds the least risky assets there in Lebanon? I mean, I understand, of course, the level of risk, which is the political risk of the country. But in terms of Lebanese investment, do you think Eurobonds is actually the least the least risky right now?
I think the two are very linked, as you know, in Lebanon in particular, because of the interconnection between the central bank, the banks, the Lebanese banks themselves, being the largest buyers of sovereign paper, and the bonds themselves. So I think the three are very very well linked to each other, and I don't think it's very risky to invest in deposits in banks, because those are very well regulated by the central bank and have been for a very long time. And in turn, I think the Lebanese banks support the government in their bond issuance. So the three components are there to safeguard, I think, the security of the investments of investors or depositors in Lebanon. Here.
And what would be a good advice you would give to someone young and who wants to join the banking industry?
I think my key advice is to do what you enjoy doing, because at the end of the day, I believe you cannot be successful unless you're enjoying what you're doing. And so you should, we're all different. Define what makes you tick and go for it. And by doing that, you'll be successful. Because if you wake up every day and you're miserable, you're not enjoying your time at the office or wherever your work is taking you, you're not going to be very successful. So please focus on what you enjoy doing, and that will solve a big part of the equation.
Tell me, how did you manage all these years to balance your work life and your personal life?
With difficulty, but investment banking is really a lifestyle, because at the end of the day, there's no clear demarcation between your personal life and your professional life. And I find myself obviously mixing the two in a healthy way, because I enjoy what I do, and I love hanging out with my business colleagues, my clients, the different stakeholders that I deal with all around the world on a weekly basis. And modestly speaking, they're the most interesting people to spend time with on the planet and learn from. And the overlap, if you will, is constant, and that's why you need to enjoy what you're doing. But what I've managed also to create more recently, within a personal context, is philanthropy, which I think was important to me in the next chapter of my career and my life, because I've been lucky enough in the first, let's say, part of my career to be able to give back now in terms of my time and my network. So I'm doing a lot of on that front as well.
Before we finish, is there a question that you want to ask me?
Oh la la. What makes you tick?
So we're kind of out of time for me to answer that question. We'll take it offline. So thank you so much. It was a great honor to have you, Makram, here and to discuss with you leadership, your career, and whatever you've achieved so far.
Thank you for having me, Natasha. It was a pleasure to be with you, and I look forward to staying in touch.
Executive Magazine. Independent thinking for the discerning mind.